Let's talk about when not to trade. When the markets are in these type of conditions, we simply just want to sit out. So today I'm going to kind of show you what I mean by that and what my game plan was for the day. Thank you guys so much for being here. I appreciate all of you. I hope you get some value from this video. If you do, leave me a comment, leave me a like. It really helps out with the YouTube channel. And I hope you guys love this video. We are going to be talking about when not to trade, what conditions we're looking for not to trade in, and essentially why I would get stopped out, why my plan wouldn't work, and even though we had a plan in action, why sometimes it's just better to, hey, understand this market action is not good. Let's try something different. So with that being said, let's jump into the charts and I'm going to show you what I mean. All right, let's get started. Perfect. So we're going to start on the daily time frame. So today, we actually had a nice run lower yesterday, but I wanted to see the market trade lower, deeper into that 4-hour fair value gap and take out this weekly low down here. So we're kind of just wanting to see market trade lower. However, we did have a couple of nice down close candles. Today is Thursday, so we could see somewhat of a retracement move on Thursday, but overall we were looking for those sells today. Let's drop down to the 4-hour. Awesome. Again, on the 4-hour, we can see that the price action has been pretty nice. Like, we have been trading down. We did have somewhat of a retracement off this 4-hour fair value gap, but keeping that in mind, I wanted to see the market retrace higher and then go lower, and I'll show you guys what I mean on the 1-hour fair value gap, and we'll kind of talk about it more on the 1-hour time frame, because that is really the optimal time frame for what I was looking at. So let's drop down to the 1-hour. Perfect. So I don't know if you guys remember, but I was talking about consolidation to expansion on one of my previous videos. And we were talking about this area of consolidation right here. So let's just take the FIB tool and we're gonna go from this low to this high. We're really just trying to measure out the 50% level, so it doesn't really matter low to high or high to low. It does matter when we're looking for those like optimal trade entries, but when we're measuring out the consolidation, it doesn't really matter. So we can see that we had this consolidation range. We did break out of it. We traded back up into that 50% level, which we were talking about on Monday or Tuesday. And then we broke lower. And this is exactly what I wanted to see. We see the market, we then traded lower into that 4-hour fair value gap. And now we're coming back for somewhat of a retracement move. And we are looking at this 1-hour inversion fair value gap because it's kind of like in confluence with this order block right here, this up close candle that right before we had this down run, and this 1-hour inversion fair value gaps kind of in confluence with it. So I wanted to use this one as well as this order block, but this one's just easier to see and I've just been using this one. So we have this 1-hour order block here, and then we have this 1-hour inversion fair value gap. We see the market trade higher, making that retracement move on the higher time frames. Look at where it closed. That closed in that 1-hour inversion fair value gap perfectly. And then I wanted to see another retracement move down, taking out these New York AM session, the London lows, and into that 4-hour fair value gap more. Let's drop down to the 15-minute time frame now. Perfect. So we're on the 15-minute time frame. We had this opening range gap right here, and it was perfect. I wanted to see that opening range gap filled. Since it's kind of like on our bias, we want to see the market go short. So this is more just like a confluence on the market, and seeing it go lower to fill this in would be perfect. I would have loved to seen that happen. We traded into that 1-hour fair value inversion fair value gap perfectly. Look at that beautiful fill right there. Seeing that, and then we had this sort of displacement move, and then we entered into somewhat of a state of consolidation. Now this is where it gets tricky because yes, we had that displacement move down, but then the market kind of just left these wicks here. And since it's a higher time frame, we can kind of assume that, hey, it's consolidation on the lower time frames. And we just weren't willing to trade inside of this consolidation because it would have been nice to see this down close candle continue to push lower. But with these wicks and the fact that we're just staying from inside this high to this low, for me, that was just a bad sign. So even though we had our plan, we wanted to see it trade into that 1 hour inversion fair value gap, have a displacement move, trade lower into these London session lows and the opening range gap. We can see the market is still consolidating. Now, how do we determine when a market is consolidating, if it is going to be taking out lows or highs and then kind of reversing? We can just kind of look at the market and tell right away. And I'll show you what I mean. We're going to drop down to the 5 minute, then the 1 minute, and I'll show you what I mean when I say the market conditions were not the best to trade in. So let's drop down to the 5 minute. Perfect. So we're on the 5 minute time frame now. I have this high and this low marked out, and I'll redo it because now that we're entering into our OTE levels, this is when determining whether we use the high or the low is important. Since we want to see the market retrace higher and then go low, we measure the top to the bottom of the range. And that'll give us our fib levels here. Now, again, we wanted to see the market trade into this 1 hour inversion fair value gap and then break lower. But as you can see, the market has just kind of just been going higher, taking out highs, moving lower, taking out lows, going higher, taking out highs, lows, and it's just this continuous price action of taking out highs, then lows, then highs, then lows, and it's just not very trending. Yes, we could take short-term trades, but for me, I like to hold my trades for a little bit longer than a couple minutes. So for me, today was just not the best day to trade. Let's drop down to the 1 minute. Perfect. So at the start of the day, it was really nice to see this displacement move down. Even if we had taken a trade earlier before 10 a.m., this would have been like a nice setup. Because if we take this high to this low right here, the market came back into those fib levels perfectly and into this 1 minute kind of inversion fair value gap. So that was something I wanted to see. But we waited for our time frame of 10 a.m. to happen. But during the course of that, we can see that the market traded lower, taking out those lows, and then right back up to take out these highs. Then we traded lower, taking out these lows, taking out this low with this swing, and then right back up, taking out this high. Then back low, made equal lows before moving higher, taking out this high. Then we move lower, taking out this low and this low, higher, taking out this high, lower, taking out these lows, and then higher, taking out these highs, and then lower, taking out these lows. So right away you can see price action is continuously taking out highs and lows and highs and lows and highs and lows and highs and lows. That is a high resistance liquidity run. Seeing the market continuously take out these highs and then these lows and then these highs and then these lows kind of just shows us that we're building liquidity for the market makers. Like, people are getting stopped out left and right, left and right. We want to wait for those extended moves to happen where we're actually going towards an area of liquidity. We have trending movements, but this market action right here, continuously taking out highs and then lows and then highs and then lows, like short term, it's just a recipe for disaster. You might as well just stay out of the market, leave your mental game and your mental capacity intact, and just stay out of the market. So at 10:50, I did decide to just stay out of the market. I was like, there's no point. Like, I'm gonna get into a trade that I don't want to get into. It's gonna hit my stop. Like, the fact that we continuously take out these highs and lows and highs and lows is just a recipe for disasters. So right now it is looking for liquidity. It is in a seek and destroy. We are taking out short-term highs, short-term lows, left and right. Best to just stay out of the market. So we did not take a trade today, and this is exactly why. These are markets I do not like trading in. We could have caught a nice 5-point run move off this, but when we're trying to aim for relative equal lows or opening range gap or like a higher time frame objective, the best thing to do is just stay out of the markets and trade another day. So that's exactly what we did. We just stayed out of this. Yes, I hope you guys like this video. Let me know if you learned something. Let me know if you traded today. Let me know if you had any luck in the markets. I'd love to know. So I hope you guys enjoyed this video. Again, for me, these market conditions are just simply not worth trading in. And even though we're following our plans, sometimes seeing this kind of price action, you kind of have to be, hey, we're not going to trade today. So thank you guys so much for watching, and I will see you all tomorrow. Bye for now.